CFDs prop firms, futures prop firms, they are everywhere right now. And honestly, they are one of the best things that have ever happened to traders without big capital. You can literally pay $100 and get access to $25,000 of capital. And you have probably been trying to pass the Fender challenge and it just feels impossible. You get close to the profit target and blow it. Or worse, you have never even been close. And trust me, I know that pain. I blew thousands of dollars on challenges before I knew this blueprint on how to get funded. And in this video, I'm not only going to break down on how to get funded, but also what prop firms really are and why they want you to fail and why they use some shady rules and why I got banned from Towards prop firm after getting paid my last payout. For those of you who are new to the channel, my name is Saul, also known as Zaha Trades. I have been trading for 6 years now and I have a $700,000 fanatic capital and got 6 figures payouts across multiple prop firms. So if you want to be on this journey with me, subscribe to the channel. So let's start with the basics. What is a prop firm? A prop firm is kind of like a game. You pay an entry fee, you take on a challenge, and if you pass all the levels, you get to the final stage, which is the funded account, where you can actually make money. And once you're funded and any profit you make on the account, you get to keep around 80% of it. Sounds simple enough, right? Okay, while you're scrolling TikToks, Instagram, you might see ads like get $100,000 to trade for just $500. But here's the truth. You are not really trading $100,000. Because of strict drawdown rules, you are usually only allowed to lose about 10% of it, which means you're basically trading with $10,000 of real room, not $100,000. And yes, the entire account is a demo account. So how do the prop firms really operate and why they want you to fail? When you buy a challenge, your fee goes to the company. And if you pass and eventually get funded and make profits, then you're eligible to receive payouts. But if you fail, that entry fee just becomes profit for the company. And they use a portion of that money to pay the successful traders. This is actually a very profitable business model, because around 95% of traders fail in trading and only 20% ever make it to the funder stage and only 5% ever make it to the payout. So yeah, while you're trying to flip an account, the prop firms are flipping consistent profit from your entry fees. But if you keep withdrawing payouts consistently, you have become an expense for the prop firms, and that's why they want you to fail. And some prop firms use shady rules to make you fail. So let's get to the blueprint on how to get funded. I use this strategy whenever I approach prop firm challenges now. Okay, in case you might get confused, I'm not going to be talking about the trading strategy right here. This is a strategy on how to get funded. Before we click off this video, wait until why I got banned from Towards prop firm after getting paid my last payout. Listen, let's be real. Challenge fees are not just some annoying costs you have to pay. Let's think of trading prop firms like a business, right? Every business from a small lemonade stand to a massive corporation has bills to pay. Marketing, rents, salaries, utilities. You don't just spend money and hope it magically comes back. You invest strategically with a plan to get more in return. If you know how to approach a prop firm challenge strategically, the ROI on trading prop firm is massive, bro. I have got a $53,000 from Fanatic, and this is from just one prop firm. I have other Fanatic accounts from which I have withdrawn another $50,000 across different prop firms. And I have only paid like 10K at most. That $10,000 was my expense for trading prop firm business. If you have $500 to buy challenge accounts, right? You don't throw it all at a single $100,000 account and hope it passes. That's like betting your entire business on one single product. And honestly, that's how most people fail. Instead, imagine buying a smaller $25,000 account 4 times, right? Suddenly, you're not putting all your eggs in one basket. You have just created 4 separate opportunities to win, 4 chances to land, 4 ways to grow, all for the same $500. So, okay, our goal is to get funded and get payouts, right? So we want to get funded first and withdraw payouts consistently. So even if we lose 3 accounts, okay, let's say A, B, C, D, and get this A account funded and make it to payout, we are good, bro. If we make 4% on this 25K account, that is a $1,000. With 80% profit split, you will get $800 plus refund fees. So we just paid $500 and now we got $800 back. That is $300 profit. So that is only one account funded. If in case you make it to 2 accounts funded, that is 2 times $800 is $1,600. So ROI on trading PropFam is massive. But if you only bought a 100K account with $500, you have a big chance to fail the account and lose all of your money if you fail that one account. Let's say you're so good at trading, you have got your strategy proven with 80%, 90% win rate. But even then, you can expect market conditions to turn out exactly like how you backtested. One losing streak and expect that news or volatility can wipe you out. And after buying 425K accounts, I will trade them one by one with a 2 to 3% risk on a single trade with 1-to-1, 1-to-2 risk to reward ratio, right? Some people might argue PropFams don't allow 3% risk per trade. Yes, that's true, but there are some that allows it. Go check their rules, brother. If the PropFams you want to trade with don't allow 2 to 3% risk per trade, then don't risk it. Risk below 2% per trade and aim 1-to-2. Even then, you can pass the challenge in a couple of days. You don't have to wait 3 to 4 months to get one account funded. Trading PropFam is all about getting funded first and securing your payouts quickly. If it takes you 4 months to get one funded account and receive payout, that's not good for you, bro. When I started trading PropFams, when I didn't know how to approach a PropFam challenge, it took me 4 months, bro, to get one funded account and receive my payout. But after my second payout, the PropFam shut down, just as I was about to withdraw my third payout. From then on, I didn't expect PropFams to last long. Now my strategy is simple. Get funded first, reach payouts and secure them. In terms of probabilities, if your strategy has a 60% chance of success per account, having 4 accounts doesn't guarantee success, but it increases your overall chance of getting funded and making it to payout. Every account becomes, let's say, a mini classroom. One account might teach you a strategy that actually works, another might teach you a mistake that you never want to repeat. You're essentially speeding up your learning curve, getting smarter with every trade. And here's the thing. By trading smaller accounts, you'll feel way less stressful, bro. You're not choking under the pressure, not panicking when a trade goes against you. You can think clearly, make better decisions, and execute your strategy instead of gambling your money away. At the end of the day, your challenge fees aren't just costs. They're investment into your own trading business. Most traders never think like this. They throw their money at a huge account, stress out, and end up blowing it. I also did that too. Remember earlier when I mentioned getting banned by towards PropFam after my last payout? Because of the contract I signed, I can't show you their names, I can't reveal their logos, but I'm risking a lot to show you these screenshots of our emails. I'm gonna blur the names right here, but the clues are all there. If you think you know which tool PropFam this is, let me know in the comments. I'll be looking for the correct answer and replying to you then. I'll see you in the next video. Ciao, ciao.